The State of Crypto is presented by Tron, connecting the world to the power of cryptocurrency.
Good morning and welcome back to First Mover. All right, we are heading off to the UK where two financial watchdogs have published their plans to regulate stablecoins. Joining us now to discuss the senior associate at international law firm Clifford Chance, Laura Douglas. Laura, welcome to the show.
Thanks very much, Jen. Great to be with you.
All right, so we have these plans to regulate stablecoins that have been published. You specialize in advising financial institutions and other market participants on financial market regulation. What do you make of these plans?
Yeah, so I think this is really the next stage of the UK's plan to regulate stablecoins and crypto assets more generally. And I think it's something the industry has been waiting for quite some time. So maybe just to take a step back and put these new publications in context. We've had various consultations over the past couple of years looking at, what a regulatory regime for stablecoins could look like in the UK. But actually the framework for the regime was laid in the summer in the Financial Services and Markets Act 2023, which became law earlier this year. Then at the end of October, we saw Treasury, so effectively the UK government, coming out with its, latest publications about how it intends to create that regulatory framework within which then these new publications from the regulators from the Bank of England and the FCA will sit. So there are a few layers to this. And I think this is really what the industry has been waiting for. It's not just to see, what does the shape of the framework look like, but how are the regulators going to approach regulation of stablecoins?
So looking at this from the perspective of a stablecoin issuer, first of all, how likely is this to actually be implemented? Second of all, what changes in their processes that make it compatible with UK law? Would that actually happen?
Yeah, so that's a really interesting question. And I think it will really depend on where you are. So the Bank of England and their publication, they're really focused on systemic stablecoins in the UK, and they're focused on sterling-denominated stablecoins. And so actually, if you're a stablecoin issuer of another type of stablecoin, at least at the moment, it's quite unlikely that the Bank of England's proposals would necessarily impact you. But where the impact might be felt is more on the Financial Conduct Authority side, and they're looking at actually, are you within the scope of payments regulation? So what Treasury is saying is that actually, if you're a UK issuer of stablecoins, then you may need to be subject to a new regulatory regime. Those kinds of stablecoins then would be regulated types of payment instruments in the UK. But even, things like existing US denominated stablecoins, they might not be directly regulated. So the issuer may not be directly regulated. But there's a line in the Treasury paper that came out at the end of October, which says that the government is still thinking about how do they enable use of those kind of stablecoins in payment chains, but without necessarily that real extraterritorial reach of trying to go into the issuer of some of those non-UK non-sterling denominated stablecoins. Right. So I think the detail is still to be fleshed out, but that's the big picture of actually it's going to really be all about scoping, and not everyone's going to be caught by every element of the regime.
I mean, it sounds like based on what you're saying here, it sounds like barely anyone currently that's a major player is going to be affected by this, because either they're not domiciled in the UK, or I guess British Virgin Islands, but I mean, I don't think that will necessarily, I don't know if that will affect them. But second is they're not usually sterling denominated. I mean, they're mostly U.S. dollar denominated. So really, is this is this just sort of I guess just kind of like window dressing here? Is it really going to do anything?
So I think there will be impacts, particularly for players that are then offering sort of payments and payment-related services in the UK and to UK end users. And I think the question is going to be, where is that sort of, who are the gatekeepers to the UK regulatory regime here? And what the Treasury paper says is that, UK government wants to accommodate fiat-backed stable coins that are not issued in or from the UK, i.e. overseas stable coins, a lot of those that exist today. So they want to accommodate use of those for UK payments for goods and services in the real economy. But they're going to look at what that approach should be. Is it the arranger of the payment rather than the issuer who then becomes caught by the regulatory regime? And I think that's one of the pieces we don't yet have all of the details for. So it's one that we still need to sort of watch this space. I would say from a prudential and sort of financial stability perspective, the Bank of England does say that they don't think that non-sterling stable coins are suitable for kind of systemically important, shouldn't grow to that level of being systemically important, particularly for retail payments in the UK, which is what they are focused on in that latest publication. So it's not to say it's just window dressing, but I think the UK is setting out really what do they want to capture in scope of the UK regulatory regime, acknowledging this is a global, kind of phenomenon, a global sort of, industry at the moment. But where should the limits of the UK regulatory regime sort of start and end?
All right, and Laura, very quickly before we wrap up the show here, if you were advising a stablecoin issuer who is not based in the UK and is denominated by US dollars, but who has UK clients, what would you tell them about this proposed regulation? Is it just business as usual?
Right. Well, I think, one of the key things about the UK regulatory regime is actually the financial promotions element. And this is about marketing. And so one of the things that has changed recently, and this is the case already today, is that sort of all types of crypto assets that are not regulated at the moment in the UK, which, is pretty much any kind of crypto asset, other than things that are like, security tokens. If you're not authorized in the UK, you're not able to market or make financial promotions to UK users unless you fall within certain limited sort of safe harbors or carve-outs. So you could get a UK authorized firm to approve your promotions. It might be possible to rely on an exemption, for example, for dealing with particularly sophisticated or kind of investment professionals. But that's really going to be where the UK regime starts to bite, I think, for a lot of overseas firms.
Laura, thanks so much for joining the show. It's a pleasure having you on again.
Pleasure. Thank you.
That was Senior Associate at Clifford Chance, Laura Douglas.